Hello and welcome to another TLC Tutoring Company accounting lesson. In this video, we are going to be taking a look at a few costs and deciding whether they are product costs or period costs, and then also deciding what cost behavior they would fall under. Before we dive right in, keep in mind that this spreadsheet I'm using here is available for download below. Just make sure once you click the link, you go to File, Download, and then click on Microsoft Excel. All right, so just to kind of get started today, we have a list of costs for a soda manufacturing company below. And for each one, we're going to determine if it's a direct material, direct labor, overhead, if it's product, or selling administrative if it's period. And then we'll also determine its cost behavior. Okay, so keep in mind as we're going through these, manufacturing cost is any cost that has to do with basically the manufacturing process. So if it has to do with the factory, if it's there because we are manufacturing this good, this is a manufacturing cost. Period costs are the selling and the other support departments. So anything that has to do with that is anything basically that is not a manufacturing cost falls into period cost. Variable will vary with the level of activity. Fixed does not change with level of activity, and then we have within a relevant range. Then we have a mixed cost, which is a combination of variable and fixed. So our first one is sales commissions. Sales commissions are not related to the manufacturing of the goods, so it's not a product cost, which means it must be a period cost. And sales commissions are related to selling the good, so it would be considered selling. Now, for the cost behavior, think of the nature of sales commissions. Sales commissions are usually a percentage of each sale. So that would be considered variable because it increases as the level of activity increases. So as we sell more, sales commissions goes up. Factory supervisor salary. So this has to do with the manufacturing process. This is the supervisor of the factory. So it is a manufacturing cost. Now we have to decide, is this direct material, direct labor, or overhead? So usually what I recommend is get very comfortable with what a direct material is and get comfortable with what a direct labor cost would be. So direct material are the materials that can be directly traced to the good being manufactured. So when we're thinking about manufacturing a vehicle, we can think about the steel that goes into it, the leather that goes on the seats, so on and so forth. Direct labor is the labor that we pay for those individuals who are directly assembling, manufacturing that particular product. Now, if it's not a direct material or a direct labor, it's overhead, right? So let's think about this again. Factory supervisor. So the factory supervisor, it's obviously not a material. And now we have to ask ourselves, is it a direct labor? Well, the supervisor is the one who is overseeing the assembly. They are not actively assembling the good. So factory supervisor would not be a direct labor. If it's not direct material and not direct labor, but it is a manufacturing cost, that means it's overhead. Okay. All right, let's go to our cost behavior. This is a salary. So variable, fixed, or mixed. Is the salary going to go up as we produce more? No, it's a salary. That would be fixed. Syrup. So we are a soda manufacturing company. So the syrup that goes into each of these bottles is probably pretty easy to say. That could be directly traced. And also keep in mind, it's the syrup that's going into the product. So that is part of the manufacturing cost, right? So we can automatically say, nope, no period cost. It goes in here. And it is a direct material. Now, since we will use more syrup as we produce more, that would be a variable cost. Factory equipment depreciation. All right, so let's start with, is it a product cost or a period cost? So factory equipment depreciation, if it has to do with the manufacturing process, it is a product cost. So since this is the depreciation for the equipment in the factory, right? So think anything related to the factory. If we weren't manufacturing these goods, we wouldn't even have to worry about this. So since it is there because we have a manufacturing department, then that is a product cost, right? So I know it's product. Now, is it direct material? Nope, nothing to do with the materials going into the good. Is it direct labor? Nope, has nothing to do with the manufacturing of, or assembly, I should say, of the good, which means that it must be overhead. Now, cost behavior, variable, fixed, or mixed. One thing I will tell you now is that your textbook most likely is going to always call this fixed. However, and this is something I always kind of think is really interesting if we ever do a little bit more advanced managerial, or maybe we're in a cost accounting class. If we think about the nature of depreciation, there are some depreciation methods that would technically make this cost perhaps variable, right? So if we're using units of output, also known as the activity method, perhaps it would be variable, but 99% of the time, your textbook is going to say, nope, this is fixed. They're going to assume that you're using something like straight line or something that's time-based rather than activity-related. The label adhesive. All right, so this is a little bit of a tough one in my opinion. Label adhesive, so it has to do with the factory manufacturing the goods. So we know it's a product cost. Now, is it direct material? And here's where we might get some people debating whether or not label adhesive would be a direct material. Label adhesive is very difficult to trace directly to the product, right? So label adhesive is something that we probably would end up just having a large vat. We would just say, okay, we're just going to use it as we need it. It isn't something that be directly traced back to the good. So it's technically, this one wouldn't really be considered a direct material. It's also not direct labor, which means this would be considered overhead. Technically, what we would call this label adhesive, it would be considered an indirect material. Indirect. So remember, direct material is something that can be easily traced to the good. An indirect material is one that, yeah, it goes on to the good, but it isn't something that can be directly traced. So we would consider that overhead. Now, is it variable, fixed, or mixed? It would be variable because we're going to use more as we produce more. Okay, sorry, spicy water. I ended up changing that. I couldn't remember what the name of this was. It's kind of like that whole club soda, I'm going to pause this. I'm going to find out what the name of this is real quick. 1 second. Okay, sorry. So it's carbonated water. So what about, I'm so sorry. What would the carbonated water be considered? Would that be a product cost or a period cost? Definitely a product cost. And it would be one that we could go ahead and directly trace to the product being manufactured. That would be considered a direct material. It's so sorry. It's going to go up as we produce more. The cost is going to increase as we produce more. So that will increase with level activities. That'd be variable. Assembly worker wages. We know that's not a direct material. So let's decide, is it direct labor or is it indirect labor? The assembly workers, definitely product. We know that. Now, are they the ones who are directly manufacturing the good? And yes, they are. We have our first direct labor here. Good. Now, an example of an indirect labor would be our factory supervisor. That would be considered indirect labor. All right, let's keep going. And is it variable, fixed, or mixed? Variable. The bottles, the packaging that it's going into. So any type of packaging, any type of bottle, that is considered a direct material because the packaging is included in the final product. So packaging would be considered a direct material, and that would also be considered variable. What about the chief financial officer's salary? So far we've seen the factory supervisor's salary. We have seen assembly worker wages, and those were both related to factory positions. Now the CFO, they aren't in the factory. They are overseeing things, right? So the CFO's salary technically wouldn't be a product cost. It would be a period cost. And it's not a selling, it's administrative. And again, that is a salary so that would be fixed. Factory electricity cost. We're seeing factory here, so we know it's a product cost. Now, is it direct material? No. Direct labor? No. So it must be overhead. Then here's a cost behavior. Is it variable? Does it change with level of activity? Is it fixed? Or here we go, is it mixed? Most textbooks are going to tell you that the electricity cost is going to be considered a mixed cost, simply because we're going to be using electricity just to keep the lights on, just to keep the AC going, whether we produce 0 units or 1,000,000 units, right? Sorry, I shouldn't say 1,000,000, but a lot of units within whatever relevant range, right? So we're going to have to keep the lights on. That's your base, and that's the fixed portion. However, as we produce more, we're going to be using more energy. And as we use that additional electricity, that's going to have a variable component on top of that fixed component. So the majority of textbooks will consider electricity a mixed cost. What about the controller's office rental? So the controller, high-level accountant, they have an office and it's a rental. So this is not related to the factory. This is not related to the manufacturing process. So it is a period cost and it is administrative. And is it variable, fixed, or mixed? That would be fixed. Next, property taxes on the factory, right? So if these were property taxes on the corporate headquarters, we would say period cost. But these are property taxes on the factory. So this is a manufacturing cost. And we know it's not a direct material. We know it's not direct labor. So it must be overhead, right? We're seeing a lot of different things fall into overhead, and it really is true. If you think about that factory, that manufacturing process, if it's not a direct material or not a direct labor, it's going to fall into this overhead category. And property taxes, they don't care how much you're producing. So that's just going to be fixed. And shipping costs. So shipping costs are considered a period cost. They are selling. And it increases as we sell more. So that would be considered a variable cost. Okay. So I hope this kind of helped. Just before I kind of sign off, just a few things just to kind of point out here. Direct materials, direct labor, those will always be variable. So I would go ahead and I would just put that into your mind right now. If it's a direct material or direct labor, that is a variable cost. Okay. And then also, if you ever decide that you are going to go off and become a cost accountant and you're going to do this in the real world, keep in mind that academics can be a little bit different from real world scenarios. For example, there might be times when your direct labor technically isn't a variable cost in the real world, and that's okay. The important thing is that you understand what these cost behaviors and what these different costs are trying to communicate to you. Okay, so keep practicing. I'll try to include some additional practice problems on the website, and I'll link to a few other things and resources that you can use in the description below. So keep up the great work. Until next time, and happy studying.